Okay. All right. Good evening, everyone. Thanks you for dialing in for tonight corporate webinar. Here we have Synergy House Berhad. We glad to honor to have the company here, Executive Director, Mr. Tan. Hi, Mr. Tan.
Hello.
And our another Executive Director, Mr. Teh. Hi, Mr. Teh. Okay. And our CFO, Kenneth Ng. Hi, Kenneth.
Hello.
All right. Synergy House Berhad, as you know, they are a cross-border e-commerce seller and furniture exporter that specialize in beautifully designed and affordable ready-to-assembly (RTA) home furniture. The company also is focusing on leveraging technology and AI to capture client base and expanding the B2C sales segment. And later on, the management team will provide more detail on it. Okay, without further ado, we will start the presentation. Over to you, Kenneth.
Thank you. Hi, everyone. Thanks for joining the presentation today, and I'll run through our corporate presentation. So we will start with an opening remarks, which I believe a lot of people would like to know. So for a start, I think we would like to talk in terms of our resilient revenue growth. I think we've announced our Q1 results a while back, and our revenue grew basically 5% to 88.1 million. Comparing to the previous Q1 of FY 2024. And the growth was actually mainly driven by the B2C segment itself, where actually when we look into this, it actually rose by 17% or 51 to 51.2 million. The B2B segment in particularly was impacted by the geopolitical as well as the tariff uncertainties, which prompted a lot of business to adopt a wait-and-see approach, hence slowing down the ordering activities. So this was actually the main reason for the decline in terms of for Q1 FY 2025. But despite that, the management and the companies is still very committed to driving revenue, mainly for the B2C business segment, through the launch of new SKUs, product categories, example from the dining set and sofa and others. Apart from that, innovation and development activities are always ongoing. We also see some foreign exchange impact in Q1, which have affected the financial results. However, this is actually natural for exporters, but as export-based company, actually we have a potential for a bigger market size and opportunities. On the second topic, basically navigating the tariff headwinds while unlocking opportunities. I think despite the ongoing tariff-related uncertainties and the recent announcement for the 25% tariff on Malaysia goods, we believe that this situation will still be able to be a one where it created opportunities for us by enhancing our competitiveness against key players such as China. Synergy House is always prepared to seize the emerging opportunities swiftly and to capitalize on the favorable shifts in the competitive landscape while other player remains uncertain. Apart from that, I think we have other key markets for our B2C business segment, namely in UK and Europe. Although the US still remains as the largest market for the Synergy House B2C. Again, we remain as agile and focused on the business growth with a continued emphasis on expansion and also strategic partnerships. And we wish to reiterate that growth is always in the mindset of Synergy. Apart from that, our focus is basically on driving operational as well as cost efficiency. We are actually actively negotiating to optimize the major cost components, including freight, storage, fulfillment, and procurement. We are also practicing a lot of internal cost rationalization efforts, including controls on new hiring, reduction of non-essential expenses, and transitioning to more cost-effective service providers. A part of that, we are also actually ongoing deployment of our robotic process automation across many departments in the company, whereby this activity will actually remove a lot of manual and non-value added tasks. Hence, our staff are able to focus on more value added activities. We are also ongoing integration of our AI as well as our digital tools to drive process improvements and our operational efficiency. Lastly, for the opening remarks, we remain focused and committed. The commitment still remains intact, whereby we want to accelerate the growth in the B2C business segment. Again, as we say, although we have both B2B and B2C, the focus on the company will definitely be on the B2C business segment due to the potential that it has. So we are going to strengthen our presence in the direct to customer channel. Basically, we also deepen our engagement on key platforms. We continue scaling up on our Wayfair, as well as we explore entry into new e-commerce platforms and marketplaces. We also reiterate that we'll reinforce our core capabilities in e-commerce furniture and build on our existing strength to drive product and customer excellence. We are also looking for further expansion in our presence in key markets in USA, UK, as well as Canada. And also the flexibility in the business model of the B2C actually allows us to navigate challenges in a more agile manner, more so in the tariff regime currently, where we believe that we are able to navigate better in terms of adjusting our prices and also managing the cost along the supply chain. So we expect to weather through this short-term uncertainty, but we expect a stability in the long term in terms of the business. As usual, we like to share our tagline. Basically, we are a cross-border e-commerce seller and furniture exporter that specializes in beautifully designed and affordable, ready-to-assemble home furniture. So basically what that means is we operate as a base in Malaysia, but our market is overseas through all this cross-border e-commerce activity. We also like to share a theory that we like to say basically when art meets engineering, where we don't just build furniture, we engineer beauty. And more so that comments and reviews that we get from customers actually acknowledge what we are trying to achieve. For example, we get a comment whereby the item was a breeze to put through, there's a good quality and looks great. The table was beautiful in my space, very easy to assemble, 65 years old and able to do it in less than an hour. So all this is actually a testament to what we are actually achieving and how we are actually solving customers' issues when they're assembling furniture. Moving on to the product category for us, we are focused largely in the bedroom furniture, where we offer items such as bed, dressers, and nightstands. And bedroom furniture is basically the largest business category in the B2C for us. Coming in second would be the living room furniture, and we have a small portion of our dining room furniture as well. As of 31st of March 2025, we are operating in over 7 markets, Canada, US, UK, Germany, France, Middle East, Malaysia as well. And we are operating in over 18 marketplaces, and combined we have more than 2,900 SKUs on offer. So as Q1 this year, we closed our revenue at 88.1 million with a PAT of 2.4 million. And based on our total revenue, we are 96% export revenue. Segmental breakdown, currently we are at 58% B2C and B2B is 42% of our total revenue. As to share our target customers, we target young adults and students, basically those who have not yet settled down, often need to move around cities or countries in search of job or educational opportunities. So basically these are people with high mobility and they're actually renting places. They probably do not have budget for expensive furnitures and they wish to have stylish yet affordable furniture. And since they're always busy and e-commerce platforms open 24/7, they'll prefer to browse and shop furniture online rather than physically buying it. Here we would like to share a little bit in terms of our business model, particularly the B2C. So this will actually give you a better, clearer picture in terms of how are we differentiated from other furniture players. Basically, our process always starts through the market research, whereby we try to understand the customer requirements, customer demand, the taste, and what is the market trend. And from there on, we will move on to the design development stage, whereby we conceptualize the item, we develop the prototype, and then we actually test the prototype to ensure that it meets all the relevant requirements. So once this process is actually meets our requirement and satisfaction, we actually launch it and then we actually outsource entirely to third-party manufacturing to do. So we don't do manufacturing, we totally outsource to third-party to do it for us. So upon completion of manufacturing of the goods, we buy from the third-party manufacturers. And in the situation of our Wayfair, actually the goods will be consolidated in Johor in one of our Wayfair's facility before it's being shipped overseas to all the overseas fulfillment centers. So our inventories are basically kept in those overseas fulfillment centers, and we wait for the sales to happen through the e-commerce platforms. So when the end customers actually order through the e-commerce platforms such as Wayfair and Amazon, delivery is made, and after sales, we actually collect feedback and reviews for our customer service. So actually, from this you can see actually we cover the entire process flow, except for the manufacturing part. So what differentiates us from others is basically normally furniture manufacturers, they are only selling to wholesalers and retailers, whereby for us we actually go towards the end customers. Moving on to the financial performance. Here we have our breakdown of revenue by business segment being the B2B and B2C. As we can see, the B2C as shown by the green color chart, we see a robust B2C growth, whereby there's a constant increase in our B2C revenue contribution. For instance, the revenue contribution of our B2C was only at 4% in FY 2020. And fast forward 5.5 years later, now in Q1, B2C is at 58% of our total revenue already. Hence, the strategic focus is on B2C as the key growth driver. Meanwhile, B2B will be the supporting segment for the business. We are also expanding our reach in terms of our product range, whereby we are moving a lot more into dining sofa, for example, as well as we are broadening our product segment in terms of a higher price point as well. Just to give an idea in terms of our revenue fluctuation by the business segment comparing Q1 24 versus Q1 25. Even though overall we just see a 5% increase in sales, but encouragingly our B2C was up by about 17%. So that actually is a testament to where our business direction is. And also normally for the B2C, it usually peaks towards Q4 of the calendar year end, where all the festive season holidays and so on are there. So as we can see for Q1 this year, our B2B was down by close to 8% due to the uncertainties arising from the tariffs. Moving on to the financial performance, just a snapshot of our balance sheet. Our total assets stands about 246 million as of Q1 2025, and our total equity and liability stands at similar 246 million. So our net gearing remains steady at 0.1 times as of end of March. Our current ratio stood at 1.9 times as of end of March 2025, and net asset stands at 25 cents per share. So moving on to the updates and highlights, we would like to share in terms of the key prospects of the B2C market, which we believe in. E-commerce is basically the future of furniture retail. There's a general shifting of trend towards buying online. And also currently what we see is really the higher acceptance for online purchase of furniture. Apart from that, B2C actually gives us a lot of product flexibility as well as adaptation. It allows us to have flexible in terms of our product offerings and also remove the need to satisfy the requirements of the wholesalers or retailers. B2C also promises a higher volume as well as higher prospects of profitability. This is due to the sales being towards the end consumers, and this eliminates the retailers or wholesalers markup along the way. And as shared, the B2C actually promises a high volume of sales. Apart from that, through B2C also there's actually borderless geographical diversification. We are able to tap on e-commerce platforms which are well linked in different regions, and that actually expedites the market expansion and as well as market penetration. Just to share the market opportunity and prospect based on data that we have, but this data was pre-tariff. As you can see, globally wise, 2025, the market is expected to be $148 billion for the furniture e-commerce sales. Meanwhile, for the two key markets that we are in, America as well as Europe, we see a healthy double-digit growth expected for 2025. So considering the two markets, the two key markets that we are in, it's actually worth $77 billion. And Synergy House sales for B2C in 2024 was at $43 million. Hence, we're actually commanding less than 0.06% of the furniture e-commerce market share in US and Europe. Hence, this actually says that there's actually much potential for Synergy House to benefit from the overall market share, which is still growing. Just to share some investment highlights. So basically, there's a strong and proven B2C revenue growth opportunity, as we shared just now, from only 5% of our revenue coming from B2C in 2020 to now 58%. This is just a testament to the huge market size available, and also the various geographical as well as market segment options in terms of price points, different product categories, and so on. Growth is in Synergy's DNA. We operate with a growth mindset. We are always seeking opportunities, innovation, constant development, as well as scalability towards the supply chain. And we always aim for sustained growth on a yearly basis. Apart from that, due to our business model, we usually say we have a pure play design expertise, whereby we focus on design development as well as sales and marketing. No manufacturing works that allows us for greater creativity, faster trend adaptation, and consumer-centric. So we do not have to worry about manufacturing bottlenecks, labor issues, and so on. Apart from that, there's a strong positioning in trendy yet affordable RTA home furniture market. We have built our reputation supported by a strong customer review, as well as we're able to balance design, affordability, as well as convenience, which is actually what generally people want. They want something look good at affordable prices. Apart from that, we always emphasize on artificial intelligence, AI, and also technology-powered advantage and continuous improvements. So we carry a lot of activities across the operational departments, marketing, market research, and so on through AI, as well as implementation of our technology. And we also emphasize a lot of process automation and improvement as well through robotic process automation softwares. So yeah, that concludes my presentation.
Okay, thank you. Thank you, Kenneth. Just now, presentation for us to understand more about Synergy House Berhad. All right. Okay. Are you all ready for the Q&A section? Okay, this question asking about B2C growth. How sustainable is B2C growth trajectory, particularly in North America and after the pandemic? Yeah, post-pandemic.
I think we believe that the B2C growth is always there. I think as we shared just now, the market size for US is very huge. And also we are currently only penetrating the affordable price range, which is USD 300 and below. We are also now working towards a higher price point, which we should be able to capture a little bit more market share as well. So I think the B2C, that is why we focus a lot on the B2C. The market size is really a lot there for us to capture.
Okay. And do you want to share it? How do you improve the B2C from just now you mentioned 5% to 58%?
Okay, I think how we grow is basically we offer more SKUs. We actually also we expand to more countries. For example, we started our B2C in the US back in 2020. Then we expanded to UK, Canada, Germany, and France. So by having more platform as well as more countries, you are able to actually have an exponential growth in terms of our B2C. And also, I think through all the process improvements, the market data that we've actually garnered along the way, this has actually helped us to actually grow a lot faster in the B2C as well. I think also apart from that, we are not really, affected by manufacturing bottlenecks, because as we outsource the manufacturing works to third party, and we have a large panel of manufacturers for us. So in a way, we don't have really a bottleneck to worry about.
Okay, quite good. Just now you also mentioned you don't need to worry about the labor also. Okay. This question asking for the tariff. To what extent will tariff-related uncertainty continue to shift Synergy regional strategy in B2B?
Okay, I think tariff, I suppose, is something we cannot escape. And as is what's mentioned here, actually affects the B2B because due to the uncertainties and so on. But again, as what we always mention, B2B is something that we are unable to control too much, because that depends on our retailers, wholesalers. which is why we pivoted towards B2C, which we're able to control more. But apart from that, but we still want to grow the B2B. We do not give it up, but we do not really, aggressively go towards the B2B because of the limitation that we understand. Hence, the focus is always on the B2C to propel the business growth. Yeah.
Okay. How about recently the Trump just announced a 25% tariff? Is that impacting Synergy House?
Okay, with the announcement that came out, I think there's a report coming out that says that actually there's a potential for room for discussion, whereby I believe the government of Malaysia will be doing some discussion. So we think that it may not be final yet, and there still could be room for negotiation and changes lah. But bearing in mind, we always say we are actually agile and are ready to take on this challenge. We have actually discussed along the whole supply chain, on costs. How do we absorb this cost along supply chain from our suppliers, 3PL service providers, freight, and so on. Apart from that, we are in the B2C business as well. We are actually able to change the market prices as required. Hence, we believe that this short-term uncertainty could affect some market jittery, but in the long term, we believe that we will actually be able to pull through. I think we have seen in the past whereby the freight costs being exorbitantly high and all that, and we still remain profitable. And Synergy will find its own way throughout this ordeal.
Yeah. And I think I need to add on something on the 25% tariff. Even though 25% is not confirmed yet, but even if we put that 25%, we are one of the lowest amongst this region if we compare to Thailand, compared to Indonesia. Not even mention if we compare to our main competitor or largest competitor, which is China. China is far more higher tariff than Malaysia. Of course, we are 5% higher than Vietnam based on 25%. But whatever it is, I think as we are actually not a factory ourselves, if one day we think that Vietnam could do a better price for Synergy House, we can just buy from Vietnam and send to America. So actually, a lot of people confuse Synergy House as a manufacturer where we cannot move around. So we always stand ourselves very flexible as as someone who is only selling.
And I understand for that. You can just turn around with a different supplier if the time you need it.
Yes, exactly.
Okay. What is the group roadmap for expanding presences into new geographical or platform like Walmart or Target?
Yeah, I think those names mentioned this is definitely on our radar. We have actually already onboarded to those platforms because those are actually big names in US. So again, we are actively onboarding, determining the product to sell, and also continue growing the regions that we have, namely UK, Germany, France, Canada as well.
Okay, quite good. Okay. Asking for your share price. The share price has seen quite a bit of pressure over the past year. Could you like share with us what is happening behind it?
I think generally to answer this question, from last year, I think around this period, I think we had the issue on the provision for the doubtful debts, which affected the share price quite a bit. And I think continuing on with the uncertainty in the markets due to the tariff and people's perceptions on how it affects a lot on the exporters, I believe this has actually reflected in our share price. And perhaps also, I think through what the market sees, our sales growth may not be so encouraging in Q1 as what we announced. But if you zoom in further, the B2C as what we shared just now is showing double-digit growth, 17% on a quarter-to-quarter basis. So I think if we drill down further, actually the opportunities and business are still there. And just to tie it back, we always say that Synergy is always on a growth mindset, and we are actually building the business for the long-term growth and prospects rather than on the short-term basis. Yeah.
Okay, they're asking for your hedge foreign exchange rate. Do you have any strategy to hedge the foreign exchange rate? And yeah, especially mostly is 96% export.
Yeah, we do actually practice some hedging activities. Last year we hedged quite a bit as well, but we actually go on a case-to-case basis as well. We actually see the market conditions, the rates, but actually just to share also now as we are expanding other markets such as UK and so on. So actually in terms of foreign exchanges for let's say US dollars, we are trying to reduce the fluctuation towards our overall impact by having other currency as well.
Okay. Also, another question asking, is there any impact of the USD weakening to Synergy House profit?
I mean, US dollars, if for exporters, naturally there will be some impact. I think that's what we see in Q1 also. But bear in mind that we actually have a certain cost base which is in US dollars as well, fulfillment charges, storage overseas. So we have some natural hedge to a certain extent. But if let's say there's an unfavorable foreign exchange, we actually will probably change our selling price, amend the selling price, or we go back to our manufacturers, look for price reductions, again, talk with the whole supply chain on how we can reduce costs and so on. This flexibility that we have actually helps us a lot in these situations.
Okay. Okay. Asking for your business margin maintain. How will the group maintain margin resiliently if shipping and fulfillment costs escalate again?
Yeah, I think this will tie back again to what they call it, the flexibility that we have. What we always mention that selling price, we're able to adjust instantly, looking at what the market demand is. And also, again, we have actually built a reputation with a lot of, let's say, for example, 3PL service providers who are able to give us favorable rates as we're able to give them volume. We also work again, like what we mentioned again, with our manufacturers to cost down, as well as what we can do is, due to our design and development background experience, right, we can actually work on re-engineering items, which are more cost effective and so on, so that, we can be more competitive in the market.
Okay, just now you also mentioned you are not the manufacturer, okay, and design for the furniture for us. And House Bhd is the current asset light model in terms of supply chain stability and quality control as your volume increase?
I think we are able to scale quite rapidly. As we mentioned, we have a large base of manufacturers to support us, be it in Malaysia, or we have a few of them in Indonesia, Vietnam, as well as in China. So, and again, the market is huge, you see. So, and again, being asset light, we are able to move faster and more agile. And given now with a lot of implementation of AI as well as technology improvements, we're able to churn out more data, make more faster and more informed decisions to help, expand the business. Quality control as well. We have our own in-house QC team based in manufacturers' place, and they're able to cater to our requirements.
Okay, there is few question asking about the share buyback. Given the strong balance sheet, is the group exploring share buyback or dividend increase or any acquisition M&A?
I think we will actually study all options, and we will see what actually suits the business, how can it bring us to the next level, timing, and so on. But in terms of dividend, I think the management team believes in dividend and rewarding the shareholders, provided the profit and everything is there. So I think, as you can see, we actually, last year, we gave a dividend payout of about 30% of our PAT.
Okay, asking for a product. Is the company exploring new furniture vertical like the office, outdoor, or smart furniture integration?
It always in our radar. I think this year we'll be expanding into office, even dining. But at this moment, we may not look into outdoor furniture yet, because outdoor furniture is not really it's not really popular in Malaysian factories. Malaysian factory do not do a lot of outdoor furniture. So we are trying to, at this moment, trying to look around ourselves to see what is more available.
Okay. Also, the smart furniture, I think now the younger generation also quite need it because we living our space like smaller and smaller compared with
Yeah,
the
we
10
are
years,
trying
20
we
years
are trying
ago.
to we are trying to look a lot of things like that. Like for example, expandable office desk that from small when you open like you can studies. We do a lot of storage, hidden storage for bed and all that. Actually, this is always what, because most of our customer base are actually living in smaller space, like in apartments or hotel or hostel and all that. So I think that is always into our design team.
Mm. Okay. Okay, asking for the P&L. Why is the presentation of the P&L changes in Q1 financial year 25 is make the result very hard to interpret? Can you further to explain for this, the P&L?
I think why we changed the presentation was basically to align with how our annual report is being presented. I think that aligns to how the annual report. But I think we take note of your comment in regards to how to interpret, and we will see whether the necessary changes are required.
Okay, thank you. Okay. Okay, I think this question just now we already answered it. Do you have anything want to add on? Can company also to supplier in country which has lower tariff or supplier by country percentage? Yeah, just now Mr. Tan also mentioned that if
Because so far because of course we are not confirmed yet. All right. So far we hear Vietnam has the lowest, is 5% lower tariff. So if that is being true, I think we can of course explore the more opportunity from Vietnam. But to our knowledge, Vietnam are not always having the same competitiveness on the product we are selling in US. So we still have to, because Vietnam is always good at something a little bit more higher end, a little bit more handcraft and all that, or we have to look into that.
yeah, also depend on the connection, also raw material cost, all that, and quality too.
For the question in regards to suppliers by country percentage, I think a large percentage of our purchases are still from Malaysia, 91%, and the single digit percentage is shared between the other countries like Vietnam, Indonesia, as well as China.
Okay, there is few questions similar with this. Just now you mentioned about you have a B2C large market, and could you explain why there's still weak on Q1 financial year 25, and then will this continue on your second quarter or will be better?
Okay, to address the first quarter financial results, generally the B2B segment actually pulled us down quite a bit, I think due to the uncertainty of the market tariff and so on. So that actually we have lower sales volume for B2B, but our B2C was still actually higher. Apart from that, basically our cost base, namely our manpower, we actually geared up quite a bit of headcount to propel or to meet the requirements of our growth. Just to give an example, as of last year closing, we have a headcount of about 250 people. As compared to 1 year ago, we are only about 160. So we've actually expanded our manpower across all departments to cater for the business growth that we see in the B2C. But moving forward, as we actually implement more what we call it robotic process automation, we do not expect the increase in manpower so substantial anymore. Even actually maybe not increasing, because most of the activities will actually be being done by automation, and the staff could actually be used to perform a higher value adding task, like you see. So we expect our fixed costs to actually stabilize moving forward. I think apart from that, in Q1, we see unfavorable foreign exchange as well, which affected the margin. Also, we actually, as we are developing new platforms, new countries, definitely the margins will be on the lower side. We have to gain the market share, get the customer base, get the reviews and so on. So this is actually part and parcel of growing the B2C. As you can see, we don't stop growing the B2C because of the long-term potential that we actually see, you see. So these are actually the normal teething process or issues along the way as part and parcel of growing. Yeah. But generally for us, sales are normally higher towards quarter 3, quarter 4, whereby the big season sales, I think from the past trend that you can see from what we have reported, quarter 3 and quarter 4 generally garners higher, better financial results.
Just now you mentioned quarter 3 and quarter 4, the result will be better than quarter 1 and quarter 2.
Generally, in terms of revenue-wise, that's when we actually report normally higher revenues due to the seasonal patterns of the B2B or the B2C.
Okay. Is this related to the festival?
Yes, I think year-end, there's more festival, Christmas sales, and there's a lot more promotions happening towards the year-end. So that actually boosts the sales opportunity for us.
Okay. Just now you also mentioned about platform. Do you want to expand more about how do you work with Wayfair?
Okay, Wayfair, we have actually been working. We started our first sale in Wayfair back in July 2020. And from then on, we have actually built a reputation in Wayfair, whereby we actually increase our status being a Wayfair preferred partner, whereby we get better privileges when we sell through Wayfair. And recently, I think Wayfair also actually implemented certain things called the Wayfair Verified, whereby their own team actually performs quality checks on the product itself that meets their stringent requirements. And that actually gives us a chop in Wayfair, whereby when customers see that, gives them more confidence. So a large range of our products has actually been verified by Wayfair on this as well. And we have actually a very dedicated team to actually, work with us to grow further in Wayfair. They even open up the opportunity for us to scale up to different price points and so on, which we are actually doing now also. So we have actually built quite a reputation with Wayfair, but notwithstanding that, we are actually also still developing other platforms that we are targeting.
Okay. Among which different the platform, which platform is give you the higher revenue?
At the moment, we are still having Wayfair as the highest revenue for the group, given
Margin
that
also?
Wayfair is the main platform that we started in. Yep.
The margin also?
Margin-wise, it varies between platform to platform and also region. Yeah.
Okay, they're asking about tariff again. How tariff current opportunity against China that just now you mentioned?
I think while the tariff for China is, I guess, not finalized yet, but from what Trump has actually imposed to them, 100% or 145% as compared to what countries in Southeast Asia is experiencing, I think the large differential in percentage will actually reduce their competitiveness by a lot. That's what we believe in. And so that's on top of the current anti-dumping duties and everything that they already have on their existing selected products to US.
Like we answer all of the question tonight. Okay. Before we end the webinar, is there any closing remark you want to share with our investor?
Yeah, I think we just have to say, despite the uncertainty that we have from US tariff, Synergy House still strongly believe at our own business model, and we are all committed to drive the same innovative. We are trying to do a lot more job, a lot more new category to grow our B2C. I think that's all we are doing at the moment, and we are still putting a lot of attention of uniting our own team, especially the top management team, to work things out. At the same time, what we think is this is the best moment when a lot of people are lost of direction, we still believe in our own direction. We still believe and still doing the same thing, just a little bit more. In the past, when time is good, when currency is in favor of Synergy House, we just do a little bit, we can be good. But now we have to do a lot more thing to get the same thing. I think that's what we believe.
Okay. From this, what set your company different from traditional furniture company? Yeah.
I think first of all, B2C is cross-border e-commerce business actually has, if we are compared, a lot of people comparing ourselves to traditional manufacturers, furniture manufacturer. I assume you're asking this, right? What we are different is because of cross-border e-commerce, we have a greater control over the category or SKU we want to sell. We have the control on what kind of design, what kind of pricing, what kind of market, and what kind of engineering products we want to do. We also have the freedom to go anywhere in the world. We can actually expand to Europe, or we can decide to expand to US, or we can even expand to Middle East if we want to, or if we have time. So I think flexibility is what we actually do. On top of that, because of our nature of being e-commerce business, we have the opportunity to enjoy a lot of AI, IT technology that give us a lot of push, a lot of helping hand. And we'll see that more and more in the near future. I believe this is actually what makes Synergy House different and what we are doing.
Okay, also come with different design, different color, and the technology advancement.
Yeah, because many people, they could have many design, but they do not have the freedom or flexibility to sell it. In Synergy House, when we see something interesting and something sellable, we can decide to do a very small volume or small quantity just to try out. So, which a lot of people do not have.
Yeah. And diversify your business compared with other, this is quite good.
Yes, we can, if we really want to, we can diversify into other category. We can diversify into our other countries. But at this moment, we try to stick to US and Europe because we still think within these two regions, we still have a lot of rooms to grow. We do not need to jump out from here yet.
Okay. Okay, back to our question. There's a question pop up. How many percentage commission does Wayfair charge you? And when you have to slash price to clear the inventory, does Wayfair share this cost with you?
Okay, Wayfair operates in the wholesale. They do not take a commission for us. Like basically, they will actually mark up from the price that we charge to them. For example, we charge to Wayfair $100, and then they will put it to the market. For example, at USD 150. So they earn the 50 from there. So that is the way they run their business model. Unlike other platforms like Amazon, then yes, there's a percentage of commission based on the retail price that we actually set. So there's a bit of a difference in terms of how each platform operates. And when you have slash price to clear, they do share a portion because again, the pricing is determined by us indirectly through the wholesale price that we charge to them.
Okay. From here, do you do any discount or promotion like in Malaysia 77, like 11/11 like that?
You mean in Wayfair or in Malaysia?
In Malaysia, also in Europe and US.
Yeah, of course. In America, they have what, President Day, they have American Independence Day, they have Christmas,
Black Friday.
they have Black Friday, they have a lot of things. I think they are all the tricks are the same, the whole world. Every month they got promotion, they got special promotion. Every month they do a lot of things. You know what? Nowadays, especially people who is buying online, like all the young people like you all, you just want to wait for the big promotion day and buy. So I think in America, there's no difference.
Okay. But for me, I also like to go to the shop to experience for the furniture first. How is the quality for me to feel it before I buy? Okay, back to the table. Is there anything you want to share with us, Mr. Tay?
Okay.
All right. And
But I
Kenneth?
think to close, I think but Synergy House is always just like what we say. We have embrace the freedom to sell. At the same time, we embrace the freedom to explore a new technology, whereby like the AI and the RPA that we have implement these few years. I think the future is bright because we own the freedom. Yeah. That's what I want to share.
Okay. Is there anything you want to add on for Kenneth?
I think what I can share is basically for Synergy House is always about continue growing, innovating, and developing the business despite all these tempering noises that we have in the market surrounding all this. The focus is still there. We are still confident and committed towards the B2C business segment that we always preach on. So rest assured, we are always thinking how do we grow the company for the long term. Thank you.
Okay, all right. Okay, thank you everyone. Thank you, Mr. Tan, Mr. Ted, and Kenneth for tonight explain and update the latest development Synergy House Berhad for us. And all right, we will end here.
Thank you.
Thank you.
Okay, thank you.